We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, doing a complete transition from the dip area of white with red borders last week to the rip area of bright green. And here we are slightly going downwards. And in today's consolidation, kind of trying to fight to hold support. Now, the S&P 500 was not the only stock trying to hold itself up within the volatility. The QQQ did as well. And our QQQ bot at 11:25 a.m. sent out a bull indicator within the volatility. And from that moment forward, inflows crossed the midpoint to the upside with full strength, as well as on 42 vision. And call options went up 70% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of our growing community of investors, all looking to learn and grow together by receiving this clarity and edge and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY in a very tight spot. We're in a big week. We have FOMC coming up, and I'm going to share with you guys my thoughts and what's going on here, what key levels to watch. But before we break it all down, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. Our Tesla bot sent out a bull indicator since 11:15 a.m. And from that moment forward, inflows crossed the midpoint to the upside with strength, full strength there on 42 vision. And within an hour, call options went up 100% plus, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, in a tight consolidation here and trying to hold above 385 and rejecting 388 and rejecting also the recent highs up here of 389, guys. If 385 gets broken through, or even 384, the next support is down here towards 377, and below that is 374. 375 area. Now in today's video, we're also going to talk about the upside potential, and we're going to look at an article together, and I'm going to share with you guys where it is that these analysis price targets are coming from. I've shared it in previous videos, but if it's your first time here in the channel, you're definitely going to want to be aware of this. And let's go ahead and break down what's going on in today's charts. I'm going to pull up the bull and bear indicators and the inflow versus outflow indicator, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, as well as becoming part of our growing community of investors, using these resources and all looking to learn and grow together by maximizing within the volatility by receiving this edge and clarity over the charts, whether stocks are going up or going down, and you can now gain access to it as well. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here on the 30-minute, the SPY got a 30-minute bull indicator here, right? On the 30-minute chart on Friday. You could see it right there. Inflows crossed, full strength. They slowed down. They started getting red towards the end of the day. Today in the pre-market, it was red. It got a bear indicator in the pre-market. Here it is fighting within the volatility, trying to consolidate and hold support. And outflows have crossed, guys. Going into tomorrow, it's going to be pivotal if it holds this support of 385 for these inflows to pick up, pull upwards, and start reflecting in the chart and cancel that bear indicator. Now, if it can't hold that support of 385 and these outflows continue to dominate over the chart and pull away from the midpoint, it could start reflecting in the chart. We have other supports to watch, as well as this bear indicator not getting canceled is dominating over the chart and has canceled the previous bull indicator, right? So we want to keep this in mind and be aware of it. So let's go ahead and look at an article that came out today that states why it could possibly go higher and what will happen if we get to those heights before a major quote-unquote pullback. Let's break it down. So it states here the S&P 500 can get to 4,150 before reality sets in, says one of Morgan Stanley's normally bearish top strategists. So this is somebody that has been normally a bear, and they're basically calling this a bear market rally, right? And this strategist has been very bearish, and he stated that it seems that inflation has peaked. Now, we don't know this just yet. This is what the strategist is stating, but also combining it with a compelling amount of technicals, we think that the current rally in the S&P 500 has legs to 4,000 to 4,150. Now, they also state that before reality sets in on how far 2023 EPS estimates need to be come down, it's going to be in effect as well. And he also states lower lows for the S&P 500 are still ahead after this rally is over. That is super bearish, and also stating that this rally is pointless, right? It's just momentum. So here I have pulled up the 1-day chart on 42 Vision. You could see how we did a double bottom here. We hit two dip areas pretty close to each other. We reversed here, and inflows were never above the midpoint until just a few bars into towards the bull indicator that popped up and the inflow crossover. So right now, inflows still have room based off the history of the chart to go as high as inflows of 26, of 20, and currently we're at 16.96. Now, what I want you guys to be aware of though is we've done a complete transition so far, and the last time this happened was from right here in June to August, and I've shared how this rally so far is reminding me of this, and also when that bull indicator popped up and how that Fed member actually propped up the market, stating that it was getting too ahead of itself. And then recently we have started to run because Fed Daly came out and stated that we may have to start thinking of slowing down rate hikes, creating this euphoria again. Now, inflows have crossed. We need to watch it carefully, but we have hit our first bright green bar into this run. Now, how many bright green bars followed it? Well, in the last time it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 of them back to back with strength. Is it guaranteed to react exactly the same? No, but something to keep in mind, or watch for that first red bar that pops up really quickly when things seem to have shifted. So something to keep in mind there as well. Now I'm going to pull up the chart here with another set of indicators that are lagging indicators to go ahead and look at where it is that these price targets are coming from the upside and even the possible downside. We're going to look at it together here in today's chart. So here we are with the SPY, and we have the lagging indicators and 42 Vision here with the bull and bear indicators, and you can see how it is lagging, right? It still hasn't even crossed over. Look when the crossover happened. Same thing here, and the bear indicator popped up way in advance. The bull indicator, same thing here as well. It rejected there, got this bear indicator, continued downwards, and then you have here the bull indicator coming up way earlier than when that crossover is bound to happen, if it even happens, right? So let's go ahead and zoom out here and talk about where it is that the analysis price targets are coming from to even state anywhere near 4,150. And then the same thing with the bearish ones, stating between 2,800 to 3,200, right? So let's go ahead and zoom out here, and you could see it very clearly here. So the last time we ran, we actually broke above it here, but didn't completely continue to cross it. We stayed under a bear indicator in the process, by the way. And the next month we rejected off that line again, and here we are pulling downwards. And I've shared with you guys why a lot of analysis, the bearish ones, are stating close to 3,000, because this purple line down here is 3,000 right here, right? Off the SPY, it's 306. That would be 3,060 off the S&P 500. And then where is it that they're getting this 4,000 to 4,100? Well, it's the line right above it. And it's the light blue line here sitting at around 403. So something to keep in mind, that they're actually ranging off of these lagging indicators here. And every time we've hit the light blue, right, we've either bounced off of it on slight corrections or slight crashes. And when we've hit the purple, we've actually bounced off and capitulated, as they call it, right? Like in 2020. And in the history of the chart, when that light blue has crossed the purple line, it has found a bottom a few months before that, right? And a lot of times our bull and bear indicators are way in advance before the crossovers, showing us the bearishness. Same thing here, and the bullishness before things start getting higher and higher. And same thing here, when it stayed above it but no bear indicator popped up, that bull indicator from way back here in 09 was still in effect all the way towards 2016 until the first bear indicator that popped up back here in 2019. So something to keep in mind here, in the bigger picture, they tend to be pretty strong. And right now, this is where analysis are getting their price targets of 4,000 and 4,100, this lagging indicator here, and then also the capitulation, or a bottom, quote unquote, as they like to call it. Not guaranteed to be it, but that's what they're calling it right now. Anywhere between 3,000 and 3,200, and even more bearish is 2,800. So something to keep in mind in the process of how things are looking here with 42 vision and these lagging indicators where they're actually pointing towards, right? So let's go ahead and look at this here. The 1 day, we got the inflows above. We want to watch that carefully, but back towards the 30-minute here within the volatility for tomorrow. 385 is going to be very important below that 380. If 380 gets broken through 375, as we see here in the chart, see how these outflows continue to pull downwards or bring themselves back up. And if they do bring themselves back up, the first resistance is 388. Above that is 390. And if 390 gets broken through, the next resistance above that, based off the history of the chart, is back towards 395. And then we can start talking about 400 and higher levels. I look forward to seeing your thoughts down below. We have FOMC meeting that starts tomorrow, and Jay Powell speaks on Wednesday. This is going to be a big week, and Friday is just as big as well. We'll cover more on that later this week. As always, guys, thank you guys so much for watching, and let's make some money.